Shares of Interactive Brokers rising after the company posted a top and bottom line beat in its earnings print just minutes ago. And joining us now in a first on CNBC interview is Interactive Brokers founder and chairman Thomas Peterffy. Thomas, great to see you. First, give me your take on this quarter where it looks like your customer accounts grew at a healthy clip.
Yes, customer accounts were up 28%, so that was good. Actually, the entire quarter was very good. We announced $1.76 a share. That compares favorably with last year's $1.32. It's up 33%. And we generally aim to grow by 20 to 30% a year, and 33%, of course, is above that. So it's a good quarter. Commission revenues were up 26%. Option volumes have increased by a very substantial 35% from a year ago. Stocks were up 26% and futures were up by 10%. And as you previously were wondering about our margin loans.
Yeah, I was going to go there.
So margin loans were up 32% to $55 billion.
That sounds concerning to me based on what you told us last quarter when you joined. You said that you're a nervous Nelly, and when margin loans shoot up, it's followed by a quick collapse in the market.
Yes, but it didn't happen.
Okay.
So, you know, margin loans were great, and the entire quarter was fantastic because we had a 73% pre-tax profit margin, which is unparalleled in the industry.
So you're telling me margin loans increasing 32% is on pace, it's not shooting up any higher?
Well, look, it looks like we are going to continue to go and have a lot of deficit spending. As a result, the dollar will deteriorate and the market will keep going up. So it's because Trump is an easy money person, and so is Biden. So that's what we're looking at.
Okay. You mentioned the politics, but before we go there, I want to talk about the small caps and the action that we certainly saw last Thursday and that we continue to see this week with this strength, not only in the Russell 2000 overall, but in the KRE, the regional banks, some reaction to the expectation that rates are coming down. What are you seeing your customers do here, and what does it remind you of if there's any historical context you can give?
Well, from the point of view of our customers, it doesn't really make much of a dent. They are still holding the Magnificent Seven and other technology stocks. And, well, maybe some of the smaller technology stocks are moving up a little faster now, but generally, still technology is the name of the game.
And how do you see the recent political winds shifting, affecting what your customers are doing? I'm talking about not only the presidential debate, where the betting markets started saying, well, Biden's chances have gone way down, but then this really awful assassination attempt on former President Trump over the weekend that seems to also have shifted things.
Well, you know, Trump is the same person, but the fact that his ear was hurt has given him at least 10 points in the poll, so it's very interesting. But as far as the market is concerned, yes. I mean, it appears now that Trump is going to be the next president, so everybody is trying to figure out how that impacts which stocks, and I don't think that I mean, I do think that oil and gas stocks are going to do better.
Okay. So somebody was just telling us yesterday, I believe, they think energy stocks will be negatively impacted because of increased drilling, increased supply. We'll see which way that goes. But what about regulation in the financial industry, and whether you want to take that as the safety of trading in securities and other things, or the overregulation of it? What do you expect to happen?
Well, I assume that generally regulations are going to be less restraining, and that is going to be good for business, and that includes, of course, Wall Street.